Hi, I'm happy to present to you the February version of our monthly magazine Alpha Strategist. The theme Keep the Faith is quite apt in the current environment. Globally, bond yields had already started hardening before the budget, and that led to a correction in equity markets. In fact, a lot of the mid and small cap companies have corrected extremely sharply. Now the budget, the announcement of the 10% LTCG on capital gains through equities and equity funds just acted as a catalyst to this correction according to us. Last year you saw that the large cap index did 30%, the mid cap did 45% and the small cap did 60%, and a lot of companies which don't have that great fundamentals also rallied quite sharply. So a lot of this correction was warranted, and we believe that the coming couple of months could be volatile as people try to digest some of the announcements in the budget. For us, the budget, the good part was the government stuck to its fiscal prudence policy and maintained the fiscal deficit at 3.3%. Yes, they have delayed the 3% fiscal deficit target that they had put out, but I think going into an election year, the 3.3% number will be welcomed by the markets. As far as the overall climate is concerned, we believe that earnings recovery seems imminent now. The messaging from a lot of companies now that most of the earnings season is behind us is extremely positive, especially around rural consumption, capital goods and cyclicals. Global cyclicals as well as domestical cyclical companies are quite upbeat, and we believe that earnings will come through quite well over the next couple of years. So although valuations on a price to equity basis seem a little stretched, we believe strong earnings will keep providing a flow to equity markets. So our view is that people should use this correction to increase equity allocations if they have not been fully invested as per their asset allocation. People who probably have been waiting for an opportunity to invest, this is the correction that they were looking for, and they should finish their allocations in the next couple of months. As far as bond investors are concerned, we believe that bond yields are extremely attractive. Today you can build a AAA AA portfolio with yield of close to 8%, and with inflation expected to be in the range of 5 to 5.5% even in the next fiscal year, real yields are extremely attractive. So it's a good time for equity investors as well as for bond investors, ironically, and we'll be more than happy to speak to you and ensure that your portfolio is constructed in accordance with your investment charter. With that, happy investing.